Hello everyone, this is Andrew McNair from SWAN Capital with our June 2023 SWAN report. In this month's video, we're going to discuss some recent headlines that influence the financial markets, but I'll also provide you some perspective on what these developments may mean for you over the next few months ahead. Now, as always, please stay tuned at the end of this video for some required disclosure statements. Now, at SWAN Capital, our market outlook has actually turned to the positive, as we talked about it in last month, and we're positive because of lower inflation and technological advances that we're seeing. This month, the S&P 500 reached a notable milestone. The index hit 20% up from the October lows of last year, bringing it back into bull territory. This recovery was mostly driven by the good news on inflation ahead of the Fed's meeting, which validated the decision to pause interest rates and let the markets take a break. The May CPI reading came in at 4%, down nearly 1%. That's more than half the level of inflation we were at during last June's peak of 9% inflation. Now, the good news, right? Things are definitely better this year. In 2022, we were dealing with supply chain hangovers, pandemic stimulus cash, the insane price for a dozen eggs, and extraordinarily high gas prices. And that's why I had to get my own chickens. And everything has improved since then. However, something to note is that the decline in gas prices isn't because there's more oil being pumped. Instead, it's because world economies are slowing down less and less, and it means that demand has obviously dropped the price of oil. The May non-farm payrolls report also surprised. We added 339,000 jobs above the expected 190,000 jobs. The ADP, which tracks new private jobs, was way over the estimate of 180,000 jobs. Maybe that's the sweet spot for the Fed. People are working, but earning and spending less, sadly, due to higher prices. Now, stop, skip, or something else. As expected, the Federal Reserve left interest rates alone at its last meeting after raising rates at its prior 10 meetings. Markets have been clamoring for a break in rate increases since the beginning of this year, but the Fed didn't seem moved to pause until the recent bank failures. Breaking the housing market wasn't enough. It took some very high-profile banks and people that had money in those banks to implode to get the Fed's attention. It wasn't until after Silicon Valley Bank, Signature Bank, and then until First Republic that the Fed threw in the towel and rolled over. Fed Chair Jerome Powell had some explaining to do this time around when it came to CPI, well over half from the last June's peak. However, he also hinted in the post-meeting comments that there could be more hikes later this year. And sure, it sounds prudent to see what the ramifications of our actions are on the economy. But this pause does sound like a candidate who announces they're suspending their campaign, and we all know they're really done and they're throwing in the towel. The Fed may come back in a few months and actually do what it said it will do. However, after these interest rate increases take their time in the market and go through the different cracks of the market, I think we'll see them actually put this pause for good. So the economy is slowing. Credit card balances are rising and mortgage rates are high. Plus, we're approaching an election year, and incumbent politicians won't want a lethargic economy with frequent layoffs and sour consumers. Inflation, sadly, will not go away, and we will just have to live with it for now and hope it goes down based on what the Fed has already done up until this point. But we'll see if the Fed sticks to their guns. In other news, there has been some development in the Russia-Ukraine war as the Wagner Group, led by their leader, tried to rebel against the Russian government for a lack of ammunition and rising tensions on the ground between Russian forces and the Wagner Group. Now, while this revolt was short-lived, it does show that Putin's war in Ukraine isn't going for him very well. A dissatisfied army, an increase in non-supportive citizens domestically show the weakness in his ability to continue this war for much more longer. So it is still unclear what the deal was actually struck between Wagner and Putin. However, some developments may be coming in the next few weeks that shed some light on it and what this future of this conflict may look like. That's it for this month's SWAN report. I do want to invite you to our halftime report that's coming up in August. Now, this halftime report is where we're going to spend 45 minutes talking about the economy, talking about our portfolios. And as a client, you don't want to miss it. If you're not a client, but you have questions about your personal financial situation, please do give us a call at 850-380-9558 and be sure to take us up on that invitation to the halftime report. We look forward to seeing you next month on our monthly market recap. See you next month.